Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Thursday, March 24th, 6:51 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Getting a little bounce this morning. Equities up 0.5%. Gold's up 0.4% after a really nice day yesterday. Hopefully get some follow through on that. Bitcoin up 2%. Oil is flat. Looking at the macro front today, we've got a number of Fed speakers, but I think the message has been loud and clear. I think they're going to be aggressive with the rate hikes. Everybody's kind of penciling in 50 basis points for the May meeting, which is the front part of May, so just about 5-6 weeks from now, with the possibility of even stepping in earlier, but I doubt that. So anyways, durable goods this morning, jobless claims, nat gas inventories, big drawdown yesterday in oil inventories. That helped jump oil about 5% yesterday. See if there's any follow through today on that. And a 10-year tips auction at 1 p.m., which will be interesting. Just as a side note, yesterday's 20-year bond auction went off really, really well. Very strong auction. Earnings front, Darden, I think will be interesting. I have not checked out the sector, but I do keep a little watch list on the side that have a number of restaurants in it. And I think they're suffering right now with the inflation and the gas prices, that if there's an area that's going to, if households are feeling the pinch, that's an easy place to cut back on. Let's cook at home kind of thing. So Darden will be interesting. And also after the bell, NEO was the one, the EV maker NEO stood out to me as a name of interest this afternoon after the bell. So let's dive into it. We had a pullback yesterday after a vicious 6-day rally, 5-day rally, I guess, starting last Wednesday, and then, culminating at the highs on Tuesday, and then a little bit of pullback yesterday. I think the key here is looking at SPY. We've got the 50 down here. Where's that come in at? 439.76. I think you can just use 440. I would want that to hold on any kind of move down today. I think once you lose the 50, you do have a level of support here at the 200, which comes in at 435.5. But I'd like to see 440 hold. And my basic premise, and I'll restate it again, I think these guys, and when I say these guys, big institutional players, I think they want to clean up their quarterly statement, get window dressing into the close of the quarter next Thursday on the 31st. Of course, we're going to trade level to level, and my hypothesis is just that they're going to want to buoy this market for the next 5 or 6 days, be able to print out a decent Q1 report, because honestly nobody, the population at large just looks at their quarterly statement. Oh, okay, well, not that bad, down a little bit, blah blah blah. And then moving into April, then all bets are off. I've considered this a bear market rally. I have a hard time believing that with everything, Fed tightening primarily, I just have a hard time believing that we just, power up to higher levels. I have no problem going long if the charts say to go long, but my basic premise again is, let's hold it here or drive a little higher into the month end, quarter end, and then reload shorts for April. So today I'd be keying off of the 50 EMA down here at 440. Below that, probably go lower is what I'd say. SPY 2 hour. Note this bear cross, high level bear cross on PPO. On the 2 hour, that's an early sign, of course, of a rollover. Now it can just oscillate here and then go back up, but if we lose this 443 area, then you could come down to 440 pretty easily. So what I'd like to throw out there as a potential strategy, and this is for folks obviously that are at their desk and have the ability to do something intraday, is that if we lose 443, then you can grab some weekly puts that expire tomorrow and just kind of hedge out whatever longs that you have. That wouldn't be a trade that you're gonna, oh my God, make a bunch of money, the sky is falling. But if you're gonna move from 443 to go down and tag the 50 down at 440, that's $3. You can buy an at the money SPY put for tomorrow, and if you get that move down to 440, that'll make you a little bit of money to counteract the loss that you would have on any longs that you have in your portfolio. And if you in this run up have mostly bubble, Ponzi, tech type names, you would want to implement that strategy on the QQQ and not on SPY. So we'll look at those levels, but what I would be doing is doing a rough calculation of how many you would need to hedge out your portfolio. Is it 3? Is it 5? Is it 10? Depending on how big your portfolio is and how many longs that you have, then that would change the calculation. So here we are on the 30-minute zoom in. We had the nice run up channel. We broke out of that. We lost this 4450 area. Now we're down below. You can see that we've got a line of support here at 443, and then we've got this support, called a little support zone between 441 and 440. But as you can see on the chart, you lose 440, you're going to come down here into the 438 area. And just following up on that hedging strategy, if you got short below 443, you would want to hold that position until you see what happens at 440, right? You wouldn't just automatically, okay, well, I'm at support, close it out. If you're viewing that position as a hedge versus some kind of directional bet, you'd probably want to hold that, because you get a little bounce, and then if we have a bad close in the afternoon, you could find yourself down at 438, and that would really stink if you had this hedge on, you took it off, and then there was a bad close. So if you're viewing that as a hedge, just put it on, see how price behaves at 440, and don't be too quick to just take it off. you would expect a little bit of a bounce there, but kind of depending on what part of the day we're at. I mean, if it got to 440 and we're at 330, mission accomplished. But if we went to 440 and it's 11 o'clock in the morning, I think you got to be cognizant of, what if they sell the afternoon, find yourself down here at 438. You'd not be feeling too hot if you had a hedge and then you took it off too fast. QQQ daily, we're sandwiched between the 200 and the 50. I think holding this 50 again will be important. You lose the 50, I think you're probably coming down to 347.50 relatively quickly. Here you see the 50 coming in right there. We've got the top of this trading range over here at 347.50. I think that would be your first target if you lost the 50. And then right here, this 347.50 will be really, really important. Why? Because if you lost that level, you're probably coming down towards 341 down at the bottom of this trading range. So, if I was loaded with tech type names, I would be keying off of the 50, which comes in right at 350 and a half. If you got below that, then I would be implementing that hedging strategy and then watching 347.50 like a hawk, because with the steepness of the advance, it wouldn't be anything to get a pullback into 341. You can actually almost visualize it. I would guess that's almost a 38% fib pullback. You can put the tool on there, find out exactly where that is, but just eyeballing it, it looks like that would be a logical target, and then get a bounce higher. 30-minute chart, you see the same type of dynamics with the same levels. IWM rejected at the top of the box. You can see here this level at 207 has been problematic. We poked above a couple of days earlier in the week, but yesterday they pretty much sold it from the get-go down here towards, let's see where that's at. Yeah, right down this 204 level, and that's where the 50 comes in. So today I would again be keying off the 50 at 204. You lose 204, comes 202, and then 200 on the downside. As long as it can hold, you can get a bounce back up towards 205.50, and then potentially back up towards 207. You can see it real clear here on the 30-minute zoom in. I would just use, it's very clear. 204 is your pivot. If you lose 204, you start that ball rolling downhill. So as far as IWM is concerned, in my mind, it's got to hold 204. And then you can see on any kind of bounce here this morning, 205.50, and then 207 would be your upside targets. Facebook, not really much of anything. 1.5% downside. I think 212 is your pivot. Below 212, you're probably looking at 208.50, 209 area, and below that, then it starts rolling downhill towards 204. So that's that one. Apple was really strong yesterday. Only up 0.82%, but that was after a poor close. Had a really strong morning and some really nice entries if you were on top of it, and that was something that you wanted to trade. We traded down, then you recovered this 168.50 Then we broke above 170. That was an entry point. And then at that point, I know some guys that got in lower and then rolled up their strikes towards 172. And then we even had a reach up that it got to 172.64, and you can see that 173 was resistance, and it even filled this little gap that I didn't extend over there. So that was filled. So mission accomplished. I think today the levels are quite clear. Below 170, I think you look for 168.50, and then under 168.50, coming back towards 167, and then 165.50. If things turn around, and if we open lower and then recapture 170, that would be your entry point, and see if you can get a move towards 172. Tesla up about 0.5%. It was up much more midday, and then it came back. This is a cautionary candle, and it just shows you the muscle memory and power of these levels. We had the big move above, and then they closed it back below, getting that supply that's overhead for all the people that were trapped back in this area. You can see that large volume over price bar kind of looms right here at this level. So in order for you to get long, you got to break above and hold that 1,000 level. And so when you see a rather large wick on top of a candle, that's cautionary, because now if you get a red day as a follow-up to this type of a topping candle, then it's not a sure thing, but you would certainly lead yourself to believe that that was, the high, and then your support is back here at 950. So now this morning, if things get all bullish again and you want to trade Tesla, you recapture 1,000, you can get long there and see if you can get a breakout to stick. But this is, quite a move here. You half expect a couple days of either resting or a marginal pullback after that really fast run. What would be also look constructive just from a charting standpoint is if you had some consolidation right here below resistance. Stay right at the top of the range, right below resistance, and then gather some power to break out above 1,000. Microsoft was not feeling it yesterday, down 1.5%. I think you got to get 301. That's been a level that goes way back in the chart. You can see there was a high back here. There were some runs at 301 back here in the chart. I think 301 is your pivot. Since we're below, if things get bullish today and you get a breakout above 301, that would be a place to get long and see if you can get a run up to 305. Yeah, here's Amazon. Got the push up here to a little over 3,300 where it got rejected. I would just key all your trades off of 32.27 on any kind of pullback to the 200. I would want that to hold, and if this thing is going to continue, I think it would hold. So I would stay bullish above the 200, and if you miss this and it came back to that level and held, that would be a place to try a long, in my opinion, and see if you don't get a move back up to this 33.15 area. Google, we had the measured move target achieved with this touch right here, and now it's pulled back. I think your pivot this morning is 27.50. If you lose that, probably going to come down towards 27.10, I would imagine, if things get soft. But overall, I think we're still in bull mode, with, after this big run, getting a pullback into 27.50. If that held, I think that would be a good spot to try along. Netflix, same type of look, just reaching up to a key technical level, then backing off yesterday. 375 is your pivot. You can see we've got a low right here at 369. Comes back here and holds. I think that gives you a potential for a bounce trade higher. If you lost 369, I think you're going to be rolling back downhill again. And notice this would be an important level to hold down at 363 because of this action here. You would expect that to hold on any kind of a pullback. Semiconductors, bad day at the office, down 2.5%. We've been saying all along that 270 is the big pivot on this chart. That comes off the daily chart, but you can also see it here with this big value area that was carved out back in time, running from about 270 down to 262. So today, it's really got to hold 262. If it can't do that, then this thing is going to start rolling downhill. I would have 262 alarmed, and if things start falling apart, I think you're going to come down into this 256.50, 257 area quite quickly. So in my mind, here is an important important level on the chart at 262. Now, if that holds, you get a long trade back up to the top of the box at 270. And for down the road, if semis start feeling it again and can break above 270 and hold it, then that's a good longer term trade. If that were to happen, just stay long against 270. I want to show you a couple of sector ETFs. This XRT is the retail equal weighted retail ETF. Amazon is the same weight as the Gap or whatever other retailing name you want to put in there. I think this is really interesting price action. 4 days back testing the 50 and not being able to break above. I think this is another one of those sectors where could feel some pressure, economic pressure, consumer pressure, cutting back on purchases. Just from a technical perspective, you've got a large volume over price bar right here that comes in at 77. This is going to be your pivot point. If this thing starts falling apart and you lose 77, I think we're going to go back down and test these lows at 72. Something that you could do is, if you get that breakdown, you can just buy straight puts if you want. Or you could go out in time, like into May, and get something like a 75-65 put spread, and just plan on holding that, and then see what happens at 72. You break 72, then it's going way down. ITB is home builders. Don't confuse this ETF with XHB. XHB has both home builders, but it also has Home Depot and Lowe's in it. This is, just exclusively home builders like Pulte and Toll Brothers and D.R. Horton and all those names. Bad day at the office, 4%. We've got this little line of support here. The lows are not that far away. This would be an area where you could get short out in time with mortgage rates rising. I think they cracked 4% this week, like 4.25%. So those are rising, and we got some poor existing. I think it was new home purchases were down the second month in a row, and you'll hear a lot of guys out there talking about the housing market is so strong that there's supply constraints and prices are up and all that kind of stuff, and that bump in interest rates is really not going to stop anybody from purchasing a home. If they want it, they're going to buy it. They're not going to let $200 a month stop them. That all may be true, but you can't argue with the chart. And that's where I think, if you're a technician and you're not a fundamental analyst that can put together, all the reasons why it's going to go up, you would say, well, how come the chart looks so bad if everything is still fine? This thing is breaking down, and we've had, here was the bounce, but it didn't last as long, and here again, a back touch of the 50 within a downtrend. That's bearish. That's a kickback rally to a well-defined level, in this case the 50 EMA. You lost the high volume support level here at 66, and now you're breaking an uptrend line, and it looks like it's headed towards the lows. And if you were to get short, even if it came down here to 60 and stopped, a back test of the prior low, you still got a winning trade. You could just get something for, an at the money put for April that expires in 3.5 weeks. That would be pretty inexpensive, and you're just looking for a bang bang trade. Now, if you're looking for something that extends out in time, you could get something in May and shoot for something a little bit more ambitious. So I will throw that one out to you. So if you're looking for individual names, look for the areas that you think are vulnerable in a rising rate environment, a rising inflationary environment with increasing fuel costs, putting the pinch on middle income families. Where are they going to cut back? You can look at individual names in restaurants. There's not a real good ETF for restaurants, by the way, or I would have showed it. So restaurant names, home builders, and retail. If you wanted to go individual names, you can check out those sectors. And of course, depending on if my thesis plays out that they're going to hold this thing together and through next week, through March 31st, then all your Ponzi and bubble names have to be on your short list for things to short on after April 1st, because I just cannot see those things holding together. Yeah, it was a nice bounce, and congratulations if you got it. I mean, ARC-F, all the ARC complex has ripped. All the Ponzi names have ripped. Short covering rally, and then people pile on the momentum to the upside. But when that dies, those shorts are coming back. I'm telling you. I don't see them being able to put together a lasting rally. I think as rates go up, those things are going to roll over just as fast as they rocketed up on this little 2-week cycle here. So let's wrap it up there. Hope you found the video helpful. If you're new here, thanks so much for spending some time with me this morning. Hit the subscribe button, the alarm bell. Jump over to the show notes and find a place over there where I've got a link to the blog site where you can drop your name in, become part of the team. You'll get all my information morning, noon, or night. For example, this morning I put together a review of the railroad sector. You'd get that in your email box bright and early this morning. You can look at it at your leisure. A lot of nice setups there. And you would have that. So you'll also get an invite to our trading room, and we'd love to have you join all the other traders there as well. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.